Are you looking to get a funded trading account? I know nowadays there are a lot of options for you. But here at Trader Funding Program, we do things a little bit differently. Plus, we're run by a group of traders that have decades of experience on trading desks and trading floors from around the globe. And we have a simple set of guidelines for you to follow with no hidden rules. And plus, we give you tools to help you become successful, like using ForexAnalytix, like being in a community of traders where you get to talk to people like me and other ForexAnalytix analysts all throughout the day. If you take an assessment during the month of July 2024, you're going to get a one-on-one consultation with me, Blake Morrow, President of ForexAnalytix. So join us today. I look forward to speaking with you soon.
Good morning, everybody. Welcome to the Flow Show, Wednesday, 10th of July. I hope you're all doing fine and dandy. Good morning, Mr. K-Man. How are you doing?
Good morning, Ryan. Good morning, everybody. Yeah, another day checked. Another day, barring a couple of exceptions, watching tight ranges, it seems. Yep, it's another day in trading paradise. How are you?
Yeah, about the same. I'm watching a very interesting battle between Euro Sterling and Dollar CAD to see who has the smallest daily range.
Yeah, right.
Yeah, Euro Sterling won yesterday. It's on course to win today. 10 pip range for that one versus 15 pip range for Dollar CAD. Not very good on the old vol front.
Be very careful, because we have already a 5 pip range in Euro Sterling. I mean, don't make too many big bets on this. Euro Sterling could do 11 pips today. Who knows?
Yeah, exactly. But on the other hand, when you do have such tight ranges, they don't last for long. So if things are going to move, they're going to go one way or another. So we could, that for Dollar CAD, that could be down to 136 or through 136.50. So yeah, tight as things are, as boring as they are, they still tell a story and can have some moves alongside them. Right, let's get stuck into it. PBOC sticking its nose still in the 713s for the fix, 713.42 versus 713.10. They're going to start an investigation now to decide whether these EU tariffs that have come in are a trade barrier to free trade. I wonder what that investigation will reveal. They've been saying they're going to retaliate against these tariffs from the EU. So we'll wait and see what that may bring. A bit of data out of Japan, inflation data overnight, PPI data coming in as expected year on year 2.9%, up from 2.6%. So it's keeping the inflationary guys, shall we say, going the right way, though it was a touch softer than expected on the month, but that's not going to be too much of a bother. Those year-on-year numbers keeping things in play. We also had inflation data from China, which was a little bit on the soft side, PPI 2 on the soft side. Year-on-year CPI at 0.2% was expected to rise to 0.4%. So these guys are not out the grip of weak inflation over there, going along the other way to some of the other countries, central banks. Even Japan seeing a bit of inflation, but China isn't. Sticking with the BOJ, sources are coming out already saying that the BOJ is to cut their growth forecast, but they will keep comments that inflation is steady and going to stay steady around the 2% level, which will give them further room to adjust monetary policy, tighten policy further. So it's a sources piece dropping again. We'll probably get a few more of those coming out closer to the meeting. Over in New Zealand, the RBNZ have done a little bit of a flip. They kept rates unchanged as expected, and they agreed that the monetary policy will need to remain restrictive. But they said, and this is the dovish tilt from the last meeting where they said they may have to hike. They said the extent of this restraint will be tempered over time, consistent with the expected decline in inflation pressures. They said some domestically generated price pressures remain strong, but that they expect CPI to return to the 1 to 3% target range over the second half of the year. Now, they were less confident on that call, saying it was more balanced risk to go one way or another, hence why they put that hawkish bias into their last policy statement. This time they've gone the other way, and naturally we've seen the Kiwi respond in kind. These, I don't want to call them minor central banks, but they do like a bit of a flip-flop, don't they, Kay?
Or is a specialist, as we have seen over the years. Never bet on the next meeting after one. Yeah, yesterday I was really expecting them to be completely on autopilot. And again, yeah, flip-flop. They still kept it at 5.5. Yes, they went dovish. Well, compared to the last one, that is absolutely so. I also think quite a bit of what we've seen on the back of this meeting is positioning. I think the FX nor the rates market was ready for them to start saying, well, read through the lines. It looks that any of the next meetings could be live for them to cut now all of a sudden, right? So we've got one in the mid-August, which is a meeting where we are going to have the further economic projections. Could it be that they already ready to cut? Who knows? Yeah, I think it took the market by surprise. Most of us, at least, and yeah, now they've changed a bit. The thing is, as well, is that as I was saying in the room, positioning being what it was, we also have to take into account that the Kiwi does not have the liquidity that even Aussie may have, let alone the bigger pairs like euro, dollar, or cable. Also, it's really one of the smaller currency pairs. And yeah, so we see a bit of a shakeout of the tree there. I was actually relatively lucky only to be in Kiwi Swiss, which didn't move that much either. But yeah, I've just decided to let it go, see what the Americans want to do with it. If they clean it up a little more, as I said, they're still at 5.5%, right? And it's not hugely different, the comment of what others are saying. Yeah, I mean,
yeah,
doors are open, as we heard from Powell, as we heard from, well, like Garden maybe a little less, but in between the lines, doors are open a bit everywhere right now.
Yeah, very much. And yeah, I mean, this one had a little bit of a run up, a little bit of a spike up in their May meeting when they had that hawkish tilt, and now it's gone the other way. So yeah, they, the RBA are just as flip-floppy with their policy as well. One hot CPI report, and they might turn hawkish again, the RBNZ. But the market is generally penciling October, November for the first cut. And even though the RBNZ, they've tilted that way, they haven't come up with any sort of timeline. They are just, as it said, the extent of this restraint will be tempered over time. So yeah, pay to watch it like everyone else. So we're not going to rush into it.
Well, that has to be said, Ryan, that expectations for them to be on hold virtually the whole of 2025 were a little bit exaggerated on the other side as well, right?
Yeah,
they're just bringing forward the risk of cutting now. But again, I think, yeah, the market was a little bit too optimistic on the Kiwi. It's not a huge liquid market, and we will see. I know you're dabbling in the Kiwi in another pair, but I'm kind of watching it, and if the US puts it lower, or the Kiwi lower if they need to wash out more positions. I'm really thinking of re-entering a bit of Kiwi longs in some form or another.
Yeah, and I think it's also wise to keep an eye on Kiwi yen as well, because that's had a little bit of a dip as well, and that's going against a lot of other yen pairs at the moment. So a lot of other yen pairs are pretty much up near their highs. You take Aussie yen, that's up, broke through its highs, and it's still sailing up there. So this one's a little bit against that. So I'm in half a mind whether to have a little dabble in here, just for a bit of a catch-up trade, but it's still jumping on, trying to ride sharks at the moment, trading anything in the yen. So yeah, I don't know.
Yeah,
Have a little think about that one.
Mm.
Okay, moving on. We had some inflation data out of Norway, and inflation coming down quite significantly. Headline inflation coming down to 2.6%, so 3 pips lower than expected for them prior. And their core year-to-date number also coming down as well, a bit more chunkier. Is that going to get the Norges a little bit closer to cuts?
It's a move lower. Norges Bank, I think they may just move them closer to the edge. Will they surprise cut? I am not overly sure, but it could. Let me just quickly check when the next meeting is. 15th of August as well. The next how shall I say, expectations or whatever projections is not before September. Could be hot in August. Who knows? It is coming down quite a bit, and we also know that they are still selling Norwegian kroner, albeit a lot less than prior months every day. It is weighing on the Norwegian kroner. Yeah, I mean, it will bring them closer. And as we have been saying so many times, you and I mean, nobody wants to hike anymore. So the next one the next question is, can we cut? And if this inflation tells them yes, they can, then it's probably bingo as well. That's at least how the market is trading it right now. Yeah,
and they should. I think, given the date, 10th of July, they should get another CPI before that meeting as well. So that might be the icing on the cake. It's another fall closer to 2%. So if you trade in the NOK, then keep an eye on that one and the next inflation data before that meeting. Right, moving on to the ECB. ECB's Nagel, speaking in German press, says we do not cut interest rates on autopilot, making sure everyone knows what's where and going on for them. ECB's Centeno, one of the big doves, says recent PPI data calls into question the adequacy of our easing pace, saying the ECB have no reason to undershoot inflation. The basis of his piece, Econostream Media, basically saying that he thinks the ECB aren't cutting fast enough. He doesn't want inflation undershooting and going through the 2% level. We'd rather have it sitting just above, even with a lower growth economy. He is one of the big doves, so in his mind they should be cutting more. A little bit of data out, and again, one of these numbers that just goes against the sentiment of the US, in that everything is getting softer. The NFIB Small Business Optimism Index, not a market mover any way, shape or form, but it's hit the highest all year. It came into the year in the 91 level, dropped in January, and still been picking up then, but it's hit its highest number. So small business optimism is rising in the US. So it goes against the soft sentiment currently in the market at the moment. Mexico CPI. Oh, it's always never on my calendar, this one. Why do they not put this one on my calendar? Every time you've got to go in and you've got to add it on, and I can't even do that properly. Right, there we go. So CPI hot on one, little bit cooler on the other. CPI year on year rose to 4.98%, but the core came down a little bit to 4.13%. So a bit of a mixed bag there for Mexico. Month-on-month inflation there or thereabouts, same sort of thing. A little bit weak on the core, a little bit hotter on the headline. Do you think that changed anything much for the Mexico?
No,
Sticky
not right
back?
now. I wouldn't think so, Ryan. I'm not going. Well, none of them are on autopilot anymore. But I don't think it's going. They will move before the FOMC, unless, and we all know that different countries have different in between brackets independence from the central bank side. Unless there's something cooking with Scheinbaum and AMLO, which would force them to cut. It's based on inflation. I don't think so. And also, I have seen, was it the some profits also that were not doing too badly either, and some investors are still for now. Okay with the state of affairs now. That can change, of course, extremely fast if they make any anti-investor decisions over there. But right now, it won't change anything for Mexico, I would say, because they would like it a little lower to really accelerate the cutting cycle also. But yeah, for the time being, and as we've been saying, Mexi is still on the other side of the spectrum from yen, for instance. It's still an 11% currency. You can turn it how you wish, right?
Yeah, exactly. And those PPI numbers also coming in a little bit hotter as well. Right, over to His Majesty Powell, and a little bit of a change to usual protocol. We didn't get the lines of his text, an hour before. We got them literally on the number as soon as the clock struck 3 o'clock here. The lines dropped, and nothing really to take from him. It was another give with one hand, take with the other. He said easing too soon and too much could harm the inflation progress, but then said easing too little and too late could unduly weaken the economy. He said recent data shows modest progress to the 2% target. Inflation has eased notably, but remains above the 2% goal. And he said inflation is not the only risk we face, but said more good data would boost confidence on inflation. Most recent labour data sends a signal of cooling. The labour market appears to be fully back in balance, and we're no longer in a heated economy. And says we are well aware we face two-sided risks and that there's significant housing issues in the US. And speaking on stress test results, says the banking sector is on a strong financial footing. And then repeats his line, unexpected weakening in the labour market could also be a case for a rate cut. Pretty much, though, everything was a dead duck as far as he was concerned. Nothing new, nothing really of note or change or difference to what we knew of the FOMC anyway. So we get to do that all over again today. Unlikely I will be tuning into that one. I have my feet up doing something else. I might go and paint my nails. Kay, what were you doing? You're off the rest of the afternoon, aren't you? What did you make of Powell? Nothing really, or any?
I heard pretty much the same as what he said in Sintra. To keep it short, I mean, can you imagine? It took 26 or 27 minutes before he could place one word.
Yeah.
In that hearing, it's quite incredible how those people handle all of this. Yeah, the door is ajar. Let's see if there's something that kicks it open. Is that a good reflection of what he said? You think?
Yeah, I think so. Yeah, I mean that line. I came back to that line again about the unexpected weakening in the labour market, and again they all through this they've expected some weakening in the labour market. So I think still, when they're talking unexpected, they're talking a bit of, you know, nosediving rather than what we've seen already, which is a little bit of softening here or there. You know, unemployment ticking up. You know, it's really going to take some awful jobs data, I think, to get them to cut.
Yeah. You know what I mean? Where I am, yes, as you rightly said as well, where I am just that little surprised is that they have been pushing for the imbalances to rebalance themselves, and now that they are rebalancing, they seem surprised it's going so fast. So instead of leaving a lot of leeway in the unemployment rate, just to take the unemployment rate as an example, instead of having leeway in the unemployment rate, it does seem that they look at other factors as well. We've seen, and we've been talking about it so often, we've seen those yellowy, orangey flags coming up, but it does seem that there is not as much room as we may expect, or as they were themselves expecting, in that jobs market. I think I'm not going to say have been alarmed, but there's stuff that they don't say, and what the market or some people in the market have been saying for a long time. Yeah, but look at the real jobs market, people taking second and third jobs and things. So things are not as rosy as the BLS wants to paint the picture. And it does look as if Powell, at least, is coming to relatively the same conclusion, which then is a change, right? And compared to what they were looking at. So yeah, I think we need to be a bit careful with those data. And this is now the second or third time that he repeats that they're looking at the second part of the mandate. So it looks as if they are pretty okay with how inflation is reacting now, but the job market is really taking the forefront of their I'm not going to say worries, but their aim of monitoring.
Yeah, exactly. And I don't know if you saw it, but I went back and watched the spat he had with Elizabeth Warren, which is always worth watching, because she absolutely despises him. And he had his hackles up as well with some of the things he was saying. But yeah, she had a bit of a point. She was talking about banks, bonuses and rules to put in place. But it was a good spat if you want to go over that one and have a look.
Yeah, isn't that the usual one where she complains about bank bonuses and things?
Yeah, she was complaining about the rules, and the regulators have put in rules to say that if bankers take excessive risks, then they potentially will forego bonuses and stuff, and that's becoming a rule. But the Fed hasn't backed that rule. She was saying that he's left it to trust the bank, and she actually quizzed him. She said, "The 10 banks, how many have put this rule in place?" And he said, "I don't know." And she went mad. She jumped all over him, saying, "Well, you're the head of the financial regulation over there. Why don't you know?" And yeah, that got his back up. But yeah, it was good TV watching as opposed to anything useful for the rest of us. Right, well, the UK Labour Party has got off to a good start with relations with Russia. They said they're going to allow British weapons to be used inside Russia by Ukraine. The Kremlin has responded by saying that if the UK allows Ukraine to strike Russia with British weapons, this is irresponsible and an escalatory step to which we will respond. So good luck, Mr. Starmer, fighting that fire. And it's all part of the rhetoric that Russia has used against the US for Ukraine using its arms as well. But they keep talking about responding, but they haven't as yet. So that's a little bit of a risk end to things, or to keep note of for the future when if they actually do something when they respond. Let's hope not, but you never know with these guys. That's all for everything in my eye line. Anything in yours, Kay?
Yeah, just one thing, Ryan. As I was saying at the start of the week, we have a bit of a more busy auction schedule. We had the 3 years yesterday. That went relatively smoothly. So we do have, if I'm not mistaken, the 10-year today. Yeah. So this is something that we may just keep an eye on to see how the bond market is reacting to. Well, first of all, the supply of the money, and then if the Powell interventions that we heard of in the past week and a half, yesterday and Sintra taken together, if that's going to encourage the market to go to auction. So I think it's one to keep an eye on a bit later today, in the absence of other big data.
Yeah, thank you very much, mate. And good morning to Himashu there in the comments. Check your email, mate. I sent you an email. Himashu won the NFP competition on Friday, scooping top
Congrats.
spot. And so he's got a whole host of prizes there. So well done for that one. And welcome here to the Flow Show, mate. Yeah, please check your email.
I recall winning the first one, the first NFP competition that you put on, Ryan. I was actually spot on the number, and since then I haven't approached even by less than 50 or 70 or so K the real number. So yeah, but I still take the medal for being the first one to hit the number right.
Yeah, and I think my record of it, 2 months on the trot where I got closest, and it's been absolute rubbish since then. But it's a fun competition. It's not serious. We all like to have a guess, and it's a complete lottery, the NFP, and that's why we love it. Right. Well, as I said, not a lot else coming up today on the calendar. We do have a couple of BOE squawkers popping up later on. We've got BOE's Peel speaking and Catherine Mann coming up later, so we get more insight into the thinking there perhaps and what's coming with rates. We had Haskell on Monday, who was not on the dovish camp, so the market's trying to guess at the moment who are those several, if we call them that were close to voting for a cut. Is it going to be Peel? It's unlikely to be Mann. She's a big hawk. So we're all trying to add up the numbers and seeing whether that means we're going to get a cut in August or not. So there's a couple of BOE speakers to keep an eye on. Apart from that, we've just got a bit of inventory data and sales from the US. Keep an eye on that inventory data because that is can be a good indicator for activity and GDP as well. If inventories start going into the negative, that means that there's a bit of a slowdown happening along the whole chain. So that's a good indicator for growth and obviously sales as well. But other than that, it's a bit quiet today on the data front as well. Right, let's have a look. I'm just going to have a look at a couple, then I'll bang it over to Mr. K. Couple of trades that I'm in and monitoring. Aussie Kiwi, this one I'm in, and I've added to my short at a couple of points up here. I've been keeping this one fairly. Let's go wide. I've been keeping this one fairly small because, as I've mentioned, it is going against quite a strong trend. But I'm just happy to play the tech levels, and we're bang on the next one right up here at the 111. So this is a bit of a make or break move here. If we bust through this and hold a break above 111, then we could be off to the races and heading a bit higher. If that's the case, my next level is up towards this 111 70s area, 77, 80s, whatever you want to call it. Let's see. Kiwi's looking very weak. Aussie still remains fairly big. So this has got a bit of a double win behind it at the moment. But as I'm just playing the techs here, playing these range tops just to see if we get a move back down towards the old magnet. 111.30, I'm calling it a day, and I'll be out of that trade. And probably from that point, it will reverse all the way back down, such is the way. Just down on the Kiwi.
I was just going to ask you, are you planning anything in the Kiwi dollar yourself?
It's a bit like Kiwi yen. It looks interesting because, if the dollar's remaining weak, you'd expect this to, maybe snap back. But then I keep looking at this, and we couldn't get back above these levels, and these are, pretty short-term minor levels. And when you can't get above those, and when you start breaking back below and holding them, I don't fancy it. I may do if we test down here this 60s and hold it and bounce from there. Then that will pretty much cement this bottom area here. But if we go through that 60s and start holding below, then I think we're heading lower. Whether that's on the Kiwi or the dollar side, I don't know. I don't know.
I think it's going to be an interesting watch for us this afternoon when the States come in, because I do have, as I said earlier, I have the impression that the market was running into the RBNZ pretty long Kiwi versus many things, because Kiwi still is a bit of a high yielder somewhere, and got a bit surprised by it. So I'm just wondering if time will tell us whether we can get back in. Like, imagine that the US walks in this afternoon and says like, oh well, I'm still long Kiwi, and this is not going the way I like it. Whether they need to clean up a few books, and we can have a little bit of an acceleration to the downside in the Kiwi. So I think time is of equal importance to levels just on the day today. If in turn Kiwi starts to hold and the US doesn't need to do anything in that fruit full of vitamins, and perhaps we've ran the course, and the cleaning of the books may be done. I'm looking at it as well from the levels as time in the Kiwi. We don't hear you anymore.
Sorry, mate.
No.
This is another one of those ones of context. You know, we've got this, and it's pretty short term from April. So we've got this uptrend. It's holding this uptrend. You know, the fibs are your guide for whether it's really breaking this uptrend. But then we've had this. Let me get my lines on. We've had this. Oh, what's going on? Why is it not working? Oh, I'm in the wrong one. That's why. Bloody hell. Give me a second.
While you're changing your picture, on the top side though, everybody should really take note of that 61.45.55. That's really a hard level to keep. We've seen the acceleration through it, but then equally it traded around there several times, and again it kept up there yesterday or the day before. So that is really a level that people should really keep a close eye on.
Yeah, and this 30s as well. I mean, it's all these little in between levels. You know, this 30s level has been, you know, a sticky level as well, and we held above it, then we broke below, and we held below it. This 61.10s has been similar. You know, you can probably call it into the big figure. But as I said, we've had this uptrend, we've had a little bit of a downtrend. It tried to break that downtrend, and then it failed, and we're heading lower again. So there's two different things going on here. We've still got this, you know, 1 month and a half downtrend to deal with. That's still in play, but we've still got this uptrend to deal with. So really, probably the key level is going to be this 50 fib. If we hold there, then maybe we get a bit more significant bounce, and it keeps this part of the trend alive. You know, you can flag this or call that a flag or whatever you want to do with it. Really, if it breaks below this 50 fib, then we're busting this trend and probably heading much lower. If we hold it, we need to take out this 62s. So for all the little levels in between, these highs up at the 62s, which if you look back on, is, you know, it's the key area, particularly this year. So it needs to get back above that level in any sort of move. So yeah, maybe a bounce off the 50 fib might be something I'll look at to grab along, just to play the range. But it would need to get through there. If we get up there and hold that, you know, that's going to signal the potential for, you know, triple, quadruple top, and then we're probably heading back lower. So yeah, I mean, I'm just in two minds how and when or if to trade this one. The old trader's dilemma, Kay.
Yeah.
Right, I'm going to pass it over to you, mate. You can have a look at a few. Yeah, I'm just going to... Oh, Euro Sterling's. Oh, it's increased its range to 14 pips now. So with dollar CAD at 15 pips. Oh, it's getting exciting.
Yeah, we're... It's all happening already. 10 pips range in Euro Sterling.
It's better than the football last night watching this, I'll tell you.
Okay. Well, just pure on the fact that 23.5 hold once again in gold. It's still looking pretty constructive, I think. And then there is this little interesting fact that, and you know what I've been saying about China and stuff, and if they would let the Chinese yuan weaken a little bit, I wouldn't be surprised to see China or Asian demanding gold. And aside from what it does on the prices and on the levels, really, I just want to take you back to this is the night from Monday into Tuesday. We saw a bit of demand in Asia, and look at what we did overnight. Again, we started at the level 23.63ish, whatever, and over the night, Asia has been buying a little bit. As I said, aside from levels, there are some things that I'm watching and always keeping an interested eye out for. And I just noticed that the past two sessions, gold had been bought again in Asia. So I reckon this is a bit of an interesting one to watch for the next few sessions. If they continue to do so, that would indicate that after a month or a couple of months of relative quiet, Ryan already said yesterday or the day before, well, and even last week or so, that China hadn't done much in gold over the past month, but it does look at the start of this July that they may show signs of entering back the market. So one to watch. Levels remain the levels, 23.5. That's now a big enough one. And then below, but the trend line is coming lower and lower. And I never like to follow this one really, but still 23.40, 45 are levels below there. If it starts to move back down, then we're probably going at least back to neutral, and potentially seeing a round of stops from people who have been buying this upside. I am still a bit long. I'm trading it around as usual, but I'm keeping a decent base long this time. Silver turning around the 31 bucks. We're maybe in a bit of a triangle here, trying to figure out what's happening. But then in the meantime, we are really just in a we changed the box just a little bit from below 30 to above 30. 30 is now support, 30.5 in between, 31.5 above. For as long as that we are in between, we probably move a little bit sideways unless the dollar picks a clear direction here. Cableino. Cable is it's also moving sideways. As Ryan already said yesterday, we're turning around that 28 thing. It's traded a bit below, traded a bit above. I don't see much really to drive it. I'm still a tad long. I did add on the NFP, but let that bit go. So I'm still base long, and I'm going to watch these levels here around 127, call it 127.5 up to 65. I think if it goes back below there, then we may see a bit of an acceleration to the downside. For as long as it holds, it may be good enough. And then we see whether we manage to get back above 128.30 to move back towards mid 128s or even high 128s if the dollar weakens a bit further. But the dollar doesn't show too many signs right now to really weaken a lot further, and I think a lot has to do with the euro dollar really. We still have this French election thing where we don't know clearly who is going to do what, and then those German data continue to be a bit weakish, and I think the euro dollar is a bit of a break on everything right now. It really should, for more global dollar weakness, get back up to those 108.45s and even break above 108.65 to keep going. Obviously, we can trade the euro crosses, but even the euro crosses are far from clear right now, because we're stabilizing in the euro sterling, stabilizing in stuff like euro Aussie, for instance, with which could be a little bit offered, but we're stabilizing everywhere. One door that is on the move right now, and I know Ryan is eyeing the dollar mix, but the euro mix. I don't really have a position, but I'm just trying to job it from the short side again. Pretty much encouraged by the move through 1935 yesterday. I was highlighting this triangle, the support around here, and it's really went through like butter. And again, as we were saying earlier in the show, Mexican peso is potentially one that is going to be hit at certain stages by anti-investor rulings in Mexico, and adding to it maybe later in the year the US elections. But in the meantime, again, it's still an 11% currency, and it's going to be treated like it, and investors are not completely leaving the boat yet. So this thing, I reckon we could have a little test of 19 here, and then we decide what to do. And I was trying to find your 1740, Ryan, that you spoke about earlier in the room. Perhaps you can show it, because okay, it's not far. I've got 47 and then 30 here myself.
Yeah, that 47's a fib, isn't it? I've got
Yeah,
47
yeah.
fib.
The 47 is a 61.8 that I have of the election low to spike high.
Yeah. But that's
Right.
yeah, that 40 level. If you just drop a line at 40, and you need to look left a bit more. It's the one that showed up start of the year, showed up late last year, all the way all the way through there.
Okie dokie. Yeah. Got it. Yeah. True. It's here. So yeah. Okay. So for our viewers, I think 1740, and then keep an eye on the fibs which are just lying around it. This is the election move, and this is from the low that we saw up to the post election, and that's going to come in around 1730. So this is indeed going to be an interesting zone if we make it down there. It went pretty swiftly through the support finally, right? That we were building around that 18, isn't it, Ryan?
Yeah, and we got the that move from May. We got the 50 fib right here, 76.
Correct. Yeah.
So that's a bit of a level as well, the 50 fib. But it's a bit short term for my liking. I do like my fibs over more than just a month and a half or a couple of months. But tech is the tech, and that I think that 18 figure 1805 is the upside level to watch from here.
Yeah, absolutely. It's going to be the level to watch now, and if you start to go back above, then perhaps it will mean something as well, or perhaps it is due to a certain event. I think I'm through it, unless people would like to see something again. Oh, one interesting though is Euro Aussie. We are in, which I think, well, okay, this could still be a flag, okay, but this looks to be a little bit heavy still, but we can't break below 160. So this is an interesting level here, and it's a nice and round level, 160 on Euro Aussie. I'd keep a close eye on if we'd ever start to break it, because that could mean that we are in for another 2.5% move lower. Okay, at top side 161.5, we're seeing activity around there. The spike that we had last week Wednesday, it extended a little bit above, but if you look at it on a daily basis, not too much. So that's around 160, 150, 60, and that's one that I'm keeping an eye on, together with Euro Kiwi. Euro Kiwi has been the subject of discussion this morning in our in our trades room, because what did you do here? Let's see what it is. Okay, not to worry. Yeah, it's been a subject of discussion in our room this morning because we are wondering whether there's more Kiwi weakness to come or not. If you look at this like a bit of a flag, we could get up to 179s. There's also a case for it if the positions are really too long Kiwi for it to even move up in the 180 and a halves. But quite a few of us are looking at potential short covering in this to start look for tops building once the positions and the books will be cleaned up to try and find the top somewhere in there. And with that, Ryan, I'm done. Back over to you if you want to share.
Yeah, no, keep it on there, mate.
Sorry. No, I have it.
Yeah, you know, as much as we moaning about the lack of volatility at the moment, if you take a Euro Aussie as an example. So yeah, as much as we complain about the volatility, okay, this is the time where patience comes to the fore, and this is where you need your discipline, and this is where you need to practice patience. You know, you highlighted on Euro Aussie, we've got 160 downside, 161.5 top side. Okay, you do your chart homework, you note these levels. Okay, don't trade in the middle, wait for either side of these levels. If it bounces from 160, you're probably going to have a good trade. If you fade it from 61, 50, 70, whatever, you may have a good trade. You don't need to risk a lot on those levels. If 160 breaks, it's probably going to go. If 161, 50, 70 breaks, it's probably going to go. So you can have low risk trades, but the key here is patience. Okay, do your chart homework, like we were talking about with Kiwi dollar. You know, yes, there's places I might trade it, not right here and now. So if I want to trade it, I have to wait and see if the price comes to me. I don't chase prices. I let prices come to me because I've had my levels. Those are levels I trade. If it comes in 10 pips short of that level, then I likely won't trade it. And if that's the case, so be it. You have your discipline, you have your patience, you do your chart work, and you let the price come to you. If it means you don't trade, you don't trade. Where people get into trouble is when they think, I like this level, but it's not getting there, so I'll jump in now because I've got FOMO and I'm bored and I don't want to wait for my level. I want to get in now. I'm feeling that way with me dollar calendar at the moment. I'm short at 136.22. I don't like it. I'm in the middle. I feel like I'm standing on the central reservation of a busy road. You know, I don't know which way I want to go. I'm not in an ideal level, and that's not a position I want to be in. So I might just get out of it and wait for better levels. But practice patience, practice discipline when markets are quiet, and trade where you would prefer to trade, not anywhere else. And thus ends the lesson for today. Thank you very much, as always, Mr. K, and thank you, boys and girls, for coming to the Flow Show. Have a great day all, and we shall see you all again tomorrow.
Thanks, Ryan. Thanks, everybody.
Cheers, mate.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.